Hello, welcome to Financial Detox, the podcast and the show. I'm Jason Labrum, your host, in studio with my man, Alex Klingensmith, and our producer team. What's up, Alex?
How's it going? Happy 15 years.
Oh my gosh, that's what we're talking about today. It's 15 years in business as, we'll just call it IDA Wealth, right? Let's just go with that. 15 years IDA Wealth. We'll talk about the whole progression, what it is like to be in the wealth management business for 15 years, actually 27 total if you add the time before we started this particular firm. But I think there's a lot that we can glean from our time, Alex, in this business and what we've done. I think there's things that we can share with investors and the public that can be helpful and useful. Maybe some of the stuff we'll be talking about out of the book, Financial Detox. But we'll get into it and have some fun and just talk about the journey and what's changed in the investment space, because we really ultimately are trying to help people avoid toxic financial advice, which there's a lot of it out there. And we're trying to help people manage their wealth for maximum impact. We're trying to help you, our listener, manage your wealth for maximum impact. And there is a distinct difference between the right way to do things and the wrong way. And there's not a lot of right ways. There's only one or two right ways to do things, maybe, and a lot of ways to do it incorrectly. So over our 27 years in the business, 15 years as this firm, we have been able to unpack a lot of that. And I think we can bring real value to people and helping them make better decisions with their portfolio. What do you think?
I think I want to ask you some tough questions to get you going here. Because to check this out, we do a lot. This is our 225th show.
We're 225. That's a nice round number for the 15 year. That's cool.
And let's back up all the way to when you started in the business. 1999, I think it was, right?
98.
98. Okay.
Yeah. Summer of 98.
Why in the world would you go into this business?
Yeah. Boy, I ask myself that still every day.
No, I mean like you specifically. So getting to know you over these past 12 years since I've known you, you're an adventure seeker, a thrill seeker, like fun, likes to stir things up, like to get people going, visionary. Of all the different businesses and industries and things you could do, I'd see you as like, you know, like a GoPro adventure seeker, maybe like an extreme athlete even or something. Like, why would you pick wealth management?
I don't think I knew any better. It was the only path I had, right? I finished college at San Diego State. My dad was in the business at that time.
Okay.
And he's a great salesman, and salesman, can be sold. And I'm probably a salesman as well.
Probably.
Yeah, probably. When, he told me about the business and what he liked about it, and I didn't have any other options. It was weird because our family had seen a couple great business ventures in our lives, my family meaning parents and grandparents. And then we had seen a couple really tough ones, things that didn't work out. Mm-hmm. And so I had visions of, starting a surfboard company, starting a surf company, starting this, doing that, heli skiing, I love to do that and all that kind of stuff.
That's what I mean. You could have gone a ski route. You could be a professional surfer, a professional golfer, a pilot, like for an airline, right? These are things that you still have these passions today, right?
Yeah, definitely could not have been a professional surfer and could not be today. But in golf, neither. I did play low-level college golf, but it was, those things were all fantasies and ideas, but what was right in front of me was a path to, get in the financial business. It was interesting when I started. I was interviewing as I was finishing college, and I remember my interview. I won't say who it was with, but it was a guy who I ended up having a pretty good relationship with, but he was tough. He said, "You're not going to make it. You're going to fail in this business."
Perfect mentor. I
have to hit certain numbers, and I got to make certain amount of hires. So I'm going to hire you because I know people who know you, and you've got some good recommendations. But besides that, it's a waste of time. You're going to fail. You look terrible. Get a new suit. You start on Monday, and don't be late or you'll get fired. And this was like on a Wednesday. I was still in school and interviewing or whatnot. And this was Merrill Lynch, yeah. And I had ambitions. I'm like, well, I graduate on Saturday. I was going to take a couple weeks and go to Europe. I'd never been to Europe. I was going to backpack. I had no money. I don't know how I was going to do that, but I'd figure it out. I think he said at that time, "Wow, you're really not that smart, are you?" And I went, "What?" And he goes, no, I said you start on Monday. Be here at 6:30. You know, you're not going anywhere. Do you want the job or not? Right. And I'm like, wow. Okay, sure, I'm in. So I started work like the Monday after I graduated school on that Saturday. I walked on that Saturday at college, but it was awesome in that I learned a lot. It was really hard because there's lots of people in the business or in different businesses. My friends were making a lot of money, and this is a tough business to get started in from scratch as a young person, right? I'm 22, 23 years old, trying to convince 40, 50, 60, 70-year-olds that I'm the secret to their life savings and they should be trusting me with their money. I had no money. I really didn't know what to do with it. I think it was good that I started at a big wirehouse because I had, a lot of coaching and guidance and influence around me on how to help people.
Yeah.
But so I spent a year and a half training and then went into production, as we call it in our business, went into building my own book of clients and started that in March of 2000, the literally peak of the market. That month, March of 2000 was my production number, my initial date of go get clients. It was terrible timing. I mean, brutal.
.com bubble bursting right around that time, right?
Exactly. I bet producer Brian can show up some charts of how that looked. But, you look at the .com bubble burst and you look at that experience. 2000 was tough. 2001 was a little tougher. And 2002 was the doozy, right? That just knocked you out. It was the three punch, the jab, jab, cross. It was interesting, but holy cow, what a great environment to learn in so that you can make mistakes while you don't have a lot of money under management. And we talk about that still today, Alex, how one of the main reasons people, I think, should consider hiring a really good experienced advisor is because of the mistakes that advisor has made. Hopefully they're willing to admit them, because it's those mistakes that we've made that now our clients never have to make because we've already made them, right? And we've seen clients make dozens, if not hundreds. We've made dozens of mistakes, if not hundreds. And those mistakes are really valuable experience that can be accretive to the outcomes for our clients.
So you spent 6 years at Merrill. Why the change from Merrill to, was it Citi or Smith? What was it called at that point?
I went from Merrill to Smith Barney, and it was a pot to the frying pan. I think it was more motivated by money when I look back on it in honesty. Is they were going to pay me to come over, right? And they pay you basically 1 times or 2 times your trailing 12 production. If you're ever wondering why advisors move firms, why do you go from Wells Fargo advisors to Morgan Stanley, from Morgan Stanley to Merrill Lynch to Morgan Stanley to UBS? These advisors are moving because they're getting paid. The environment is not different. At those major firms, knowing lots of advisors and being at 2 of those, and we were at Smith Barney that turned into, I was at Smith Barney that turned into Morgan Stanley while I was there.
How many business cards did you have in your 6 years there?
Yeah, 6, 5 or 6.
That's not confusing.
We were Smith Barney, Solomon Smith Barney, Citi Smith Barney, Morgan Stanley, whatever. I mean, it was like 5, at least 5. It was terrible. But isn't that, people think, oh, my guy left and went to Merrill or Morgan because he was going to go get a better opportunity. No, he left because he got paid to go. And
so you were in it. You were in these big firms. You were working, you were grinding, you were learning the ropes, paying your dues, seeing how the business really, you grew up in these big firms. Yeah. Why would you ever leave the safety? I'm putting up these quotes, right? Yeah. The safety of a big broker dealer like one of these big giant banks.
It's funny because we're, a little more origin of why this show is being done today, right? Financial Detox, the whole thing we've designed to be a consumer education brand, just to have casual conversations about money, how to invest your money, what type of advisor to hire, why you should hire an advisor. All of those are the reasons why we have Financial Detox. You can check us out at financialdetox.com, get more information or reach out to us if you want. But we're recently celebrating our 15-year anniversary, right? And we're doing this month. And we're doing some work on some videos and telling that story. And so it just made sense, I think, to roll this podcast into that and that story, because I think there's a lot that we can help people with, and maybe even advisors who are thinking about doing different things. But
And I think, hold on, I want to finish that thought and tell people what I think on this. And the reason why I push for this agenda, this topic over some other ones that were definitely contenders, because literally you have a debate last night. I can't believe you've held out this long without even mentioning it, because it probably infuriated you, but
it's tough.
But check this out. I mean, I think when we, the past few weeks where we're trying to basically evolve our marketing and our voice in the community, which I think we do a great job by acting, maybe not by showing people through these kinds of things. That people want to know who you really are, right? Who are you, Jason? What's your personality? Like our clients, the clients that get the chance to actually meet you, get to know that, but it's really difficult to do on a website, or maybe impossible, or on a podcast even. So that's the reason why I was like, I want to push this because it's 15 years. Let's celebrate it. You know me, I always love a good party and a good celebration. And that's why I'm going to keep drawing this out of you today, because I think people want to know who you are, because who you are as the leader of this firm is definitely going to trickle down and around to all the other people that work at IDA and what makes us special and different, right?
Yeah. It's interesting because the reason we started the video concept that actually our producers on this show are helping us do some work on, but when you hear about a financial firm or a financial advisor tells you what they do, it all sounds the same.
Yeah.
A guy at Merrill Lynch, a guy at Morgan Stanley, a gal, Edward Jones, us, IDA, Fisher Investments, they tell you we build really great investment portfolios and we help you with your planning, and it all kind of sounds the same. And we're going through a process right now of telling our story. I'll leave all the finite details out, but we're trying to tell our story. And the problem is we're telling it, and what we're trying to do is show it. Because if I tell it, unless somebody's really interested in the intricate details, it doesn't work. Like I can tell you, we have a very unique proprietary investment management process. The way we execute tax-sensitive asset location.
You lost me. No, I'm just kidding.
Exactly. But
tolerance band rebalancing.
The way I describe that, very few people want to follow along and get that much detail, unfortunately, because there is a difference, right? What we've built at IDA is the pursuit of better. It is challenging all the conventional thoughts.
Hold on. You're fast forwarding. Hold on. Back to your story. We're going to get there. I know you can't help yourself. So you're at Smith Barney. It changed names a few times. It turns into Morgan Stanley. Why in the world would you leave? Why? What were you thinking?
I've thought a lot about this, and I've had a lot of different answers over the years because I'm trying to find the truth, right? And one of the things culturally, about IDA that I think is worth sharing is just we do have a culture of trying to figure out where we're wrong and learn from that, as opposed to try to prove we're right. Then this stems out of our training with Extreme Ownership and Jocko Willink and Dave Burke and that team of amazing human beings who have helped us implement some principles and some strategies to make ourselves better by being more humble and looking for where we're wrong. But here's what the real answer is. I couldn't control the culture. I couldn't build the pursue better, fix it immediately if it's broken, treat people like gold, treat your clients like gold. There you go. Our little table tenants. Treat clients like gold. Do anything and everything you can for those clients. Just do more than anybody else is willing to do for clients, and do it for a price that's right. And then the biggest thing to me is I like to have fun, and I'm happy. I go to bed whistling. I wake up whistling almost every day, right? I'm just a happy dude, and I want a happy environment. I want people to be excited about what they're doing. I want them to be excited about where we're going. And at those firms, I had zero control over the front desk gal or guy. I had zero control over my assistant, really, who was going to be assigned to me to help with client service work and administrative work. And it made it miserable, because when you can't control who the people are around you, especially when you're trying to run a business, you can't control your business. And so I had no idea it was going to end up as it did, Alex. And I'm grateful and thankful every day for the 25 people we have here. And it's taken a lot of work to do that, right? This is 15 years in the making. I mean, there's been a lot of successes and failures and hires, and we had to have some turnover, and we had to get rid of people who didn't fit. But I mean, at this point, I can literally look at our team and say, I don't think there's a weak link on the team. and everybody exhibits the same set of beliefs and desires to serve clients and drive client outcomes and do it with a good attitude. And if you don't, you're just not going to be here, right? So that's why I left, so I could create the culture and the environment of pursuing better that I really wanted for clients.
What was it like to, because it was September of 2009, 15 years ago, and the environment, the climate, what the industry was doing, what you liked about the industry, what you liked about the opportunity to be independent. You kind of, were ahead of the curve, maybe on purpose, maybe part luck, part intentional. Like, what was happening there in the industry that's so prevalent now that wasn't prevalent back then 15 years ago?
Well, I think that the move to independence and move to this fiduciary thought process, which I knew about, right? And I thought I knew what it was, but I really didn't understand the extent of it when I left. And I think a lot of the reason I said I left was to go be a fiduciary for clients, to control our destiny and our clients' destiny better, which was all true. At the time, I didn't know the degree to which I think it has an impact on the client, though, and the actual client outcomes.
Yeah.
So since then, there's been a massive migration of high quality advisors leaving wirehouse firms and big brokerage firms and going to start RIAs. Mm-hmm. There's going to end up being $1 trillion RIA. There's already north of $100 billion RIAs, and RIA stands for Registered Investment Advisory Firm. And if your advisor works for an RIA that does not have a broker dealer affiliation, broker dealer is just a BD, oftentimes used as an acronym BD. But if you have an advisor who's an RIA or with an RIA, that Registered Investment Advisory Firm, does not have a broker dealer affiliation, then it's highly likely they're operating as a true fiduciary for you.
All the time.
Yeah.
No matter what. No commissionable securities, no incentives like that where it creates
everything disclosed. Yeah.
The other thing,
if you have to disclose all conflicts of interest, yes, and all sources of compensation, which in the other universe where most advisors still reside is this suitability world. I have to be suitable, or I have to, even now they say the fiduciary standard, but yet it's crossed up with suitability. And if you're not a full-time, all the time fiduciary, that means that I can literally sell a client, a product to a client that me as the advisor, I'm not being nefarious. I'm not getting paid extra money, but the firm is getting paid money to have that on the platform. So I'm not doing the best thing for the client. Kind of against my control, though. I'm not calling the advisor
control. There's nothing you can do different about that, right? Even the advisors that choose to do a fee only service or practice within these big firms, their firms are still doing business the old way. What about the storyline of Schwab? If you think about, like, you talked about market share and how it's changed in the past 15 years. I was at a big Schwab event, and Schwab's not the only independent platform that RIAs can function through, right, as custodians for our client assets.
Fidelity, Goldman Sachs, Altruist. Yeah.
It's the independent market now has over, I think, 25%. Schwab alone's like 18% of that. And rewind 15 years, it was like single digits. It was not 15%, 20%, right? So it's a growing trend because of those reasons you described, right?
I think it is. People want to control their business. They want to do the right thing for the clients. They want to get out from underneath the corporate stranglehold of the large corporation that truly is receiving lots of backdoor compensation for the products that are on their platform. Our firm, IDA Wealth, which is part of the Financial Detox umbrella, is we receive no compensation other than what our clients pay us directly. They know what they're paying. They know when they're paying. They know why they're paying. There is no other compensation coming to the firm through the back door. And unless you work with a pure RIA that's only an RIA, you cannot say that's true. You cannot say at Merrill Lynch there's no compensation for product platform placement and for product creators to get on that platform. It's for
making markets and taking spreads that are conflicted in themselves, right?
It's almost like I wanted to do this show and draw the conclusion between health and pharma. And that's a topic we're going to be talking about. There was a really great podcast on Tucker Carlson.
I'm halfway through it right now.
Yeah,
don't spoil the end yet.
Yeah, I won't. Callie and Casey, they wrote the book called Good Energy. They're talking about a lot of the same things that RFK is talking about. And there's a few other people who are making noise in this space. Hopefully they don't get knocked off by the pharma companies. But what's going on in our world is just insane, from the conflict of interest. Thanks, Brian, for putting that up. If you're watching us on YouTube, you can see this screenshot there. Great book. I recommend you get that immediately and listen to that
maybe
podcast.
Our next book club, maybe, huh? Idea book club idea? Okay.
And that, get that podcast, listen to that podcast with Callie and Kelly, or Casey and Callie from on Tucker. Like Tucker or not, it's not political. This should not be political. If anybody makes this political, shame on you for making the health crisis in our country and the massive amount of obesity that we have and the diabetes. 50% of people in our country, roughly speaking, if I can remember the stat correctly, are facing this obesity. And the problem with that is that you've got all the FDA, the USDA, they're all funded by pharma, and the research papers and all that stuff is also funded by pharma. So there's a conflict of interest.
Not just pharma, but it was also, I was listening to the part where they talked about how Cadbury is one of the primary, financial supporters of the Diabetes Association.
Right.
So talk about confusing to so the people that are creating these products that are actually making us unhealthy are helping set the guidelines by which health is defined.
They are not really helping set the guidelines. They are setting the guidelines. Yeah.
I liked how she talked about too, as a medical student at Stanford, right? And she became a surgeon.
Top of her class.
She is, and this, I'm going to correlate this back to wealth management real quickly. She was not trained on how to develop outcomes, positive outcomes for patients and look at the whole picture. She was trained on how to identify ways to do surgery, which makes money, and how to prescribe medication, which makes money. So positive outcomes, long-term holistic approach. That sounds pretty familiar to what we do, isn't it?
There's such a correlation that we have to do a whole show on this correlation and really try and bring some data and help our listeners understand, because if anything, we want to raise awareness, right? We're not claiming we're the almighty smart and have the crystal balls. That's not the point. The point is there's some awareness, and our experience in the business gives us some insights that maybe other people don't have. And then you draw the correlations between other businesses and what's going on with the health epidemics and challenges. I mean, we talk about all the money and shut down the whole country on COVID, but yet nobody ever really talked about obesity and diabetes during COVID, which was the number one killer during COVID, and the direct correlation. Very, 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 very few healthy people died of COVID. Almost every situation of a COVID death was related to 1, 2, 3, sometimes 4 and 5 other morbidity factors, mostly diabetes from the food we're eating and consuming, and the poisons we're eating and consuming, which has been written off as good by certain journals of medicine and different things in the FDA and USDA, because they're being funded by the pharma, and the pharma and or the cigarette companies own all the food companies that are producing all the crap food. It's not full disclosure, and it's not a fiduciary. And if you're providing financial advice for money, you should have to do what's right for the client. If you're feeding people food and putting it in their body and their family's body, you should have to disclose what's going on, what's in that food.
Yeah. And taking back control of what you can control, really. I suppose if you're a doctor, a surgeon, and you correlate to what we do, we're not doctors or surgeons, but we like to sometimes use that as a metaphor. If we're an advisor, a fiduciary advisor, we need to treat the whole patient. We need to have a comprehensive financial plan, and thinking about the origins and 15 years of working at this and building it to what it is today. I'd love to have you talk about what the client experience looks like today, intentionally designed and continually breaking and putting back together and making it even better and evolving. What does the client experience of a client look like today, and why?
Man, what you said there was so good. Just looking at the whole thing. I can't leave that topic. I got to just hit one thing. I mean, looking at what is the root cause of all the inflammation and all the problems we have in society today? And if you don't think it matters when we're talking about money, how is that correlated? Oh, it matters, because our country's going broke, and our country is going to go broke funding Medicaid and other healthcare issues. We're paying 10 times the money for Ozempic or one of the other several drugs. We pay 10 times what Europe pays for the same drug. They want to put Ozempic, every kid 6 years old and older, under a new AB 52, whatever provision. If a kid is eating terrible food and is obese and is getting diabetes, they want to put them on Ozempic, a lifetime medication that they're never off of, that costs $1,500 a month. If they're poor people, it's Medicaid funded, which means it's government funded. We're spending more on that than we're spending on our own defense. If you don't think this matters to your money in the portfolio, you're missing the boat. It matters. And how we as individuals have awareness about this matters, and it'll
Take back
change
control.
whether you have good outcomes in your portfolio, and whether the market's investable, and the United States as a country has money to defend itself and defend the free world. We're not going to have any money because we have a health crisis that is so intense and costing so much money. The country will go broke, and that will affect the standard of living for every single individual in this country in a massive way. No politics allowed. You have to be an independent person. You have to think like an independent. You can't be a brainwashed puppet of the left or the right. And you have to just really look at facts and common sense here. So sorry, Alex, I had to wrap that
It's
up
okay.
and put a bow on it.
I think it's important because this is part of the story. 15 years or 12 years before at the big, kind of learning and growing, and then making that leap of faith. I know we have some pictures that are going to be thrown on here later to show the story timeline, and thinking about the memories that you can recall from 15 years of building this company into what it is today and what you stand for. Your beliefs have changed, right, Jason? I mean, have evolved, have grown. You've been at times maybe not blinders on and a little bit too polarized, a little too extreme, and you realize that's probably not the best way to steward true financial peace of mind as an organization full of people that really want to do the best thing for our clients and want to learn and grow and have our minds changed with new information, better information, right?
Yeah, I mean, there's been some paradigm shifts that have happened over these 15 years, major paradigm shifts. And some of them are industry wide and finance in general and investing in general, and some of them are internal, right? That we've made paradigm growths, and just realizing, wow, we thought this and that's not actually true. We have to reevaluate this. It's been awesome though. What a journey, right? We've had unbelievable clients who've given us the trust and confidence to go to work for them. We've done very well because we don't guess, we don't crystal ball it, try and pick the hottest stock or chase things. Instead, we're building, as you mentioned earlier, and back to that, is just like, it's a holistic, comprehensive view, right? So we're taking a look at a client, trying to understand the experience they've had. Like, what experiences have you had? Because those experiences that they've had may totally drive how they behave, and behaviors are the biggest factor in whether you're successful as an investor or not, is your behaviors and the discipline you have.
I can think of two things right now that one of them, I'm going to bring you back to the health thing for a minute. Actually, I'll say that one for a second. The first one I think probably has to do with the fact that no, I'll go first on that one. So when you think about the problem with healthcare and pharma and big business that has an agenda, is I correlate that then to commissionable security sales. I started out in insurance, so I'm guilty of learning the industry and learning how to do a consultative sales process, selling insurance products with high upfront commissions. I did it. I learned from it. I won't do it again. And the reason why is because it's just like a patient coming in, whether it's a child, probably a child. Let's use a child because that's even more sensitive to most people. Anybody who's a parent or around children, is you have a child who doesn't know any better. And instead of looking at the whole picture and thinking what's the best outcome for this child long-term for their whole life, I'm going to treat something with a quick fix that I get paid to do. And that's a problem inherent in what it is, like selling a commissionable product that doesn't have a long-term vested interest in long-term success. And you might pretend like it does and to convince yourself. That's really dangerous when you convince yourself of something that's not true. We all felt guilty of that in one way, shape, or form. In relationships, oftentimes it can be the most dangerous. But when you're an advisor or you're selling someone something, or you're advising, especially doctors, right, who you're supposed to trust your doctor. Yeah. But they're conflicted in how they're doing what they're doing, and they've never been taught a different way. I didn't know anything different until I met you and turned about insurance. I was like, insurance is great. You're like, sometimes, but not often. And also it's a bigger picture. We need to develop a comprehensive financial plan. We need to look at the whole chart of this patient and think long-term, not just how do you fix the feeling that they're feeling right now. And then eventually you want them to have surgery because that pays you even more. Eventually, so then you correlate that to eventually we're going to sell them a bunch of commissionable securities, and then we're going to day trade, and then we're going to time things and chase trends because we get paid more and more and more. That sounds like pharma. It sounds like commissionable securities, right?
It really does. The correlations are unbelievable. We should probably make this a book, like the pharma finance.
We would get canceled so fast. You got to be careful how you build the foundation of that book.
Right. We might get knocked off. I'm glad I have CCW. But it's a scary world. There's tons of correlations in the finance world. The biggest thing, 27 years of doing this in investing, the biggest mistake I've seen people make is that they compartmentalize and they take one piece, one component, one emotion, one thing, and they draw all the conclusions off of that. And it doesn't work that way. You really do have to think holistically. And this is true whether you have 500,000 of investable assets or whether you have 50 million. Probably more true even on the higher end, as you have to think comprehensively about what am I doing? How do I pass assets?
It impacts more people at that point. You have more responsibility.
How am I going to pass along the values that came with this wealth creation as well as the wealth, right? And that's what some of our clients are most concerned about, is not making money. They want to preserve it and they want to figure out, how do I pass the values, the things that help me acquire this wealth? How do I pass that on to my heirs too?
And you're doing it through leadership at IDA. So let's go back to the story a little bit. We jump off and back on. It's good. So you make this leap of faith. You leave Morgan Stanley with, at that time, I think 5 employees, 4 founding advisors, Rick Labrum, Darcy Wadsworth, you, and Sean Moore. 4.
Sean came later. So
okay.
I would say it was the 3 of us and Jordy.
And Jordy Chapinski.
Did Darcy even come right away? I'm not sure if Darcy came, and Rick didn't even come right away. He came later.
Okay. But like within 3 to 6 months of you were first, and you're out there. And that was, how many clients would you say were around that first year that you were able to successfully transition into?
Well, it was like 100 clients. We had 120 million in assets under management. We were a small firm, right? A small firm. And it was just enough to barely put it together.
What are we today?
Today we're probably 1.2 billion in assets, maybe 1.25. And then around 1,000 clients and
private wealth clients, about 100 business retirement plan clients, maybe 400 to 500 tax clients. We have 3 divisions.
Yep.
We have 3 offices. This is a much bigger thing now, but has anything really changed from the origins when you think about it?
That's a good question. I mean, yes, it has, because we've become like experts in financial planning, tax planning. Adding in and integrating tax is really important, I think, for our clients. Even if we're not the CPA, that's okay, because we still partner with outside CPAs too.
Yep.
And if we are great, if we're not great, we collaborate with that other advisor and that CPA to make sure that we're connecting the dots between, investing with a tax mindset and optimizing that investment and making the most out of that investment and keeping more of what you earn. That's changed. I think when you look at the depth of financial planning and the sophistication of our financial planning, that's changed, right? We've added so much capability there and dedicated people on our team who just unpack that. Like when we use our financial planning software, we're super users of that software. Most advisors dabble in it. We are super users. So it's very cool for the client, the experience. And by the way, as a listener of the show, if you aren't getting this, you should have this. You should have an advisor who runs an interactive, dynamic financial plan that has all the components of your financial life, all the cash flow, all the interrelated functionality between money in, money out, expenses, earnings, profits, everything, businesses, rental, real estate. You should have all that modeled out in a live, living, breathing software program that you can update regularly and continuously. That is what the financial planning and investment universe has evolved to. Yep. If you have a financial advisor, should be evolved to.
If it's being done
correctly, which it's not in most cases. I mean, every single, and I can't say every single, that's too conclusive, but I would say more than 9 out of 10 clients who come to our firm, IDA Wealth, whether they come through Financial Detox, a show, they're referred or whatever, they have never experienced the financial planning process done right. They think they have, because they say, I had a plan. Their plan was like their advisor sent them a PDF with some recommendations. No, like a financial plan is an interactive, living, breathing document that you can do what if scenarios on. You can sit there and model out your life. And wouldn't you say, Alex, do you think that it's 9 out of 10 new clients to our firm have never experienced?
You're reminding me of my second thing, and I totally forgot it until you started talking about this. But and I'm going to ask the question because I want to take this back to your 12 years at the big firms, and then another reason why you left and did things the way that you did and taught all of us how to do it this way was that you always. I'm going to tell your story real briefly and ask you to add to it, but no disrespect to the people that work at those firms. They're wonderful people that work at these big firms. You go into one of these big firm branches at one of these big buildings, nicest parts of the cities, lots of money being spent on the first impression, right? Mm-hmm. And you walk in and you might have a chance, let's say, to interview 15 different people that work there, 15 lead advisors that have teams behind them. Many of them are solo. Some of them have teams depending on how big their practices are. And you ask them what's their financial planning philosophy and what's their investment philosophy. And you might get 15 different interviews, 15 different sets of advice and philosophies, right? Do you remember the story you tell? You tell a little bit differently. So why is it different here? And why should it be different?
Well, it's so broken, right? If I go to Merrill Lynch and I interview, I don't want to pick on Merrill Lynch. If I go to any,
well, you were there, so that's why you probably think of it. But.
Yeah, I'm not disparaging Merrill Lynch in any way, shape, or form, or anybody there. If I go to any major firm that has a big brand name or a regional name, and I talk to 15 different advisors at that firm, male, female, whatever, I'm probably going to get, 10 to 15 totally different sets of advice. And I just don't see how that can be right, because there's not 10 or 15 ways for me. If I'm an investor, I'm a listener of this show, there's not 10 or 15 right ways for me to do it. There are 10 or 15 different ways to do it, but there's really the optimum, the best way, the fiduciary way. And that's broken. So when we started this firm, I said, I want to centralize this. I want to take the best ideas of everyone at this firm, those who are the investment committee, who think about this stuff, who do analytics, who do research, who study this stuff. Those people are going to sit on the investment committee, and together we're going to fight and we're going to debate and we're going to come up with the best strategies, from conservative capital preservation investors all the way up the spectrum to aggressive growth investors. And we're going to design that together under the collective knowledge of our team, under this ensemble, collective knowledge, group thinking, challenging, trying to figure out where you're wrong. But even better, and the step up, is now we take that information and we go out and stress test it against Goldman Sachs, against BlackRock, against Avantis, against JP Morgan. We give them
the giants, the industry giants that have teams of experts,
200 research people. And we say, here's our best thinking. This is what we think we should do for our clients who are along the spectrum. Break it. We don't say what's good. We don't want a pat on the back. We say, break it. Where are we wrong? And what comes out of that every quarter is just unbelievable information that either confirms, hey, we were on the right track, or we need to rethink this. This is a great idea. We add this in. So our clients are getting the collective knowledge of not only our team, but the collective knowledge and the best thinking in the entire industry. They're getting that deployed into their portfolio in this personal one-on-one relationship, interactive, comprehensive, dynamic, cash flow-based financial planning tool. It's the best thing you could ever create.
It's distinctly different. It really is. And I it's one of the things I'm the most proud of, that coupled with the fact that we're willing to change and willing to be wrong. Like you mentioned earlier, make mistakes. I think it's really dangerous to say we always do it that way. So why would we ever change, right? I remember, this is a brief story, and then I want to take us into the future of IDA a little bit, and then we have to close because this is going to be too long.
The longest podcast we've ever done, huh?
Well, I had a feeling it was going to be a good one because it's 15 years in the making. But I think so. David, when we first met David Reyes, and he came from a bigger firm, and they had their ways of doing they had their ways of doing things, and he helped develop those things, and he had a very way, this is how we do it. And he came in and he was very smart, very, very technically proficient, very analytical, left-brained. And him and I got into it immediately. It was great because I was like, well, no, this is how you do it. You're wrong. This setting is important. It changes everything. He's like, well, no, but if you do it that way, then this doesn't work. And I'm like, these kinds of things. It was like two people that are very stubborn. I'm very stubborn. Yeah, there's David.
That's David Reyes. There you go.
Yeah, but he changed my thinking because he showed me that, and I was willing to listen. I was willing to be like, you know what? I've been doing this for way longer than you, man, but it doesn't matter because he wasn't right and he wasn't wrong. It was just different. So together, those differences of opinions combined into an improved client experience for financial planning.
Better outcomes.
Super good. I was like, wow, we need to have more of these arguments. I pick a fight with him every once in a while just to see what's left, but I think we're pretty aligned at this point.
Yeah, I try and claim to him I'm better than him at planning, and he says he's better than me. So that's always a fun little battle because
no, there's no way.
He's a formidable competitor in the who's the best at the financial planning.
Also willing to learn. He's also coachable though, which is important. As a young guy, he's got the, we all have egos, and he's like, you know what though, like I listened to you, and it changed the way I communicate to clients and lead them to make decisions. Because, anyways, growing moment for both of us.
Is he a better golfer?
Is he a better golfer?
Oh no! I mean, than Alex. Yes, Alex is definitely the worst golfer. David's in the mix as being okay.
Yeah, no, I don't. So
and
golf
there's
me,
one of our clients taking some rips on the simulator. If
no,
you're
that's
watching
Mike
on
Batten.
YouTube.
That's our one of, he's a lot of things
Friend.
to us. Friend,
Yeah.
attorney, like awesome attorney. I think is he a golfer? No, taking me golfing is like taking someone surfing who doesn't know how to swim. You just don't. It's not.
You just don't do
it.
it. Yeah,
no,
I'm
it's
not
dangerous.
taking you golfing.
Yeah.
So let's close out with this, right? Like, look at the fun we're having, and we want to just, I think, just pay homage and tribute to the fact that we have amazing people at this firm. We have amazing clients who give us their trust and confidence so we can do what we do. Wow, what an experience, right?
Well, what's next, Jason? What's 15 years from now?
Oh, we're doing so many cool things, right? I mean, you look at, there's a shot if you're on the of our office. You know, we had an office, we bought it, owned it, remodeled it, made it perfect. Then we ended up growing out of it, so we started a new office. Looking at some pictures there, it's great. We have an environment that is conducive to collaboration, lots of hangout talk spots and events for our clients. We had an event here recently where we had a pro golfer in to give instructions on our full swing golf simulator. It's just, it's an amazing, I think, place to work. I think it's an amazing place to work. It's an amazing place to bring value to clients and to do things and make an impact. And where we're going is into the future is to continue to challenge ourselves to get better. But we're also years ago have started diving into alternative investments and helping clients get true diversification in their portfolio by owning a portfolio that looks similar to an endowment, an institution, because the returns for those large scale institutional super high net worth families have been better than regular investors. And they've been better because they have assets that are non-correlated to stocks and bonds and act different and have higher return profiles. By alternatives, I'm talking about private equity, private debt, infrastructure, real estate. So we've made a deep dive into that over the last 4 or 5 years. We're getting better. We're creating a fund to bring that to our clients in a more efficient way. I've had 2 calls today. I was a little late to this because we are working through some strategic partners on that. It's going to be absolutely amazing in a way we can bring enormous additional value, diversification, and better outcomes to our clients. So we're continuing to push forward, Alex. You know, there'll always be something exciting going on at IDA.
I think we're doing what we've been doing for 15 years. We're just doing it. We've evolved into the future and we continue to push forward and try to make things better and easier for our clients. Cautiously, true financial peace of mind, to steward true financial peace of mind is our purpose. So when we do things, it's meant to be an all-weather, all-season proof way to do them. But the improvement is it's hard. Some of these things are difficult. There's a reason why they haven't been done yet, right?
Yeah, they are. But I mean, look, in the end, in order to be financial detoxed, in order to have the right portfolio and maximize your wealth preservation, protect your family, protect your wealth, and grow it in a way that keeps pace with inflation, you have to get financially detoxified. That's our whole mission here is, and by doing that, you have to realize, look, the old way is maybe not the right way to do it. I have to have a portfolio that's better. I have to have a plan. I have to have some alternatives in that portfolio. If not, you're leaving money on the table and your advisor's not earning their money. If you have an advisor who hasn't done an interactive, ongoing, continually dynamic financial plan and you don't have alternatives in your portfolio, those 2 components right there tell you you have to make a change unless you just don't care about your outcomes. But I think most people do. So here we are, financialdetox.com. You can check us out. We'd love to hear from you. If you want a second opinion, you want to show us what you're doing and get your thoughts. We are in the business of growing our assets under management, and we have capacity and we want to grow. So that's what Financial Detox does for us. That's the self-serving interest, is that people hear the story and they go, wait, I don't have that. I'm confused, or my advisor is not a fiduciary and I need help. And you can really easily get a hold of us by just going to financialdetox.com. You send an email, we reach out to you. And I think the experience and the feeling you have through the financial detox process is one that is super comfortable. It's very easy. It's very friendly. It's relaxed. And it drives outcomes that are better. So that's what we're doing here. And Alex, I really want to flip the script someday and interview you and ask you questions, but you're so good at it. It's like, what am I going to do, producer Brian? How am I going to ever be? I mean, Alex might be the greatest moderator and what is Alex's role here? I mean, he's so good at this.
Oh, he kept you on track for sure.
Thank you.
He's really done that for like 12 years. He keeps me on track.
I got to keep you on your heels and keep you backing up, man. Yeah, you never know where I'm going to steer it. We didn't even talk about our families. We could do a whole other version of the show where we talk about what happened in those 15 years with our marriages and children and growing up and learning and growing as parents, right? As fathers.
I mean, amazing, right? When we met, we had littles. In fact, there was a picture I had shot over of my kid in a stroller when I left Smith Barney. Dax, my oldest, was literally in a stroller. And I remember I was sneaking around town because I didn't want to get seen by any of the advisors in my firm, so they didn't say, hey, Jason's looking for office space. He's obviously getting ready to leave. But I was pushing.
Luke wasn't even born yet.
No, Luke wasn't born. I was walking in. I just remember going into the office. We ultimately picked carrying that darn car seat with this kid, and he's a fat little kid, man. He was chunky, and I carrying
like
that
6'2" now or something.
Yeah. I mean, he's 6'2", 15 years old, and it was like this all started. He's in a car seat. Amazing. But
I met you, and Grady wasn't even born yet. Harper was 6 weeks old. Avery was 2.5 or something. Now they're 10, 12, and 14. Time flies, man, when you're having fun.
Oh my gosh, it's crazy to think about it like that. But it is fun. It's been great. And we appreciate you, our listeners. Thank you so much for tuning into Financial Detox, the show. If you're on YouTube, we'd love you to hit us up with a like, make a good comment. If you don't like the show, just quit watching it. But
unsubscribe.
Yeah, just unsubscribe. But we'd love you to subscribe. Check it out. Stay tuned. And we're coming up with some stuff here soon that's going to have like a subscription base where you can actually get portfolio investment suggestions, all kinds of different things as a Financial Detox member. So keep an eye out for that stuff. Thanks for tuning in. Thanks, Alex. Appreciate you. Thanks for our producers. And I'm Jason Labrum. We'll catch you on the next Financial Detox. Adios.